Major indexes. Joining me now is Rebecca Walser, president at Walser Wealth Management. Rebecca, it's great to have you on the show this afternoon. So the S&P, a new record high, even as this Delta variant spreads. What is working in the stock market?
Yeah, it's a weird world where when we get bad economic news, we think the Fed will have greater runway to continue to be accommodative. And so the market actually reacts positively, meaning that the Fed will keep accommodating so we can keep buying and we're going to keep getting that support level from stimulus that the market can keep going higher. So it's a very odd situation because, I like to look at the fundamentals, and you see 9 million plus job opportunities, 400,000 initial jobless claims last week, which is way higher than what we thought we were going to get. And those kinds of economics where people are not going back to work where we would need them to, then you start to see, New York talking about indoor masking, California talking about masking again, and potentially even hearing rumbling of maybe being shut down completely. And you start to really worry that the market will have an interruption that we don't need.
It is interesting. The Delta variant, certainly not spooking investors, I guess, unless you own some of these travel stocks. Rebecca, any concern that there could be further contagion, that what is negatively impacting the travel stocks right now might spread to other sectors?
Absolutely, always a worry, and I always look back at what sectors really performed. And IT carried the day last year, but we're really much broader than that this year, and that's what we want to continue. The thing I would like to exercise caution with this Delta variant is not that it's not a real thing and that it's very contagious, apparently more contagious than all of the former strands, but it seems to be a lot less deadly. And so if we can get to people to either be willing to go for the gene therapies that have been, promulgated out there by all the various pharmas, or go through, a therapeutic if they do get sick, but it's a lot less deadly. So I don't think we should be thinking in terms of economic shutdowns like we had last year when we didn't know anything about this virus. And I think that's really the marker that people are going to stand on, is that it doesn't make sense to shut down again when we have so much more data and we have ways to deal with it. Let's stay open and let's keep going forward with reasonable precautions in all industries, including travel.
Now, here's a question for you. We've seen big companies, Microsoft, Tyson, they're the latest ones today, Equinox, SoulCycle, Facebook, Google, Union Square Hospitality Group, which is a restaurant company based here in New York. They have all decided to take the step to require that their workers get vaccinated. Rebecca, if we see more of that, do you think that that could positively impact the market?
Well, it's a mixed bag for me because I am a lawyer, and so I look at always the Constitution. And while you absolutely agree to do certain things when you take and accept employment, to take an existing employee and tell them in order to continue employment, you must do this, and it has to do with their health, I think is uncharted territory. And I won't be surprised to see a lot of class action lawsuits. So I would say as a lawyer, I would highly caution companies to have such a line without any religious or other types of exemptions, because I do see that will become problematic as lawsuits come, and it will interrupt some people. Some people will resign their position, and companies need to be prepared for that. And I don't think that they are. I think that they think that they can just mandate something like this and then employees will fall in line. I am an employer myself. I have my own practice, and my employees have not been given any such mandate, nor would they ever be given any such mandate.
Rebecca, let me ask you this. Lyft reporting earnings after the close. As we dive into these results, what do you want to see from Lyft in order to feel comfortable about this economic recovery?
Well, I'm definitely looking for, rides per share. I want to see that the users are going up on a consistency basis. And I'm definitely, they beat last quarter. And so we're looking to see less losses per share than what we've been seeing. And that will obviously go down as ride shares and rides go up and people get back into the cities where they don't have a car, that they really need these ride services. So I'm hoping that we've seen some positive and more usage from Lyft.
And I know that you'll be able to talk about that once we are able to digest those results. Yes. So, Rebecca, thank you for signing on for the hour to join us on this journey here. I am just curious. Well, we're probably just about at the halfway mark, maybe a little bit over in terms of this earnings season. What has been the indication to you about where the stock market is headed the rest of the year, as we have gotten guidance from actually a decent amount of companies, obviously some better guidance than others?
Yeah. I think everyone, because we're always doing year over year comparisons, so we're comparing Q2 this year to Q2 last year. And certainly that should be an easy comparison to make. We should definitely have more activity across all sectors and down at all levels of industry to say that we're back. Now we're not maybe as back as we'd like to be, and we keep facing additional challenges, but certainly we're not at the point we were last Q2 where we were shut down and we were trying to figure out what in the world is this new thing on the scene and how we're going to deal with it. So that's, I think, the biggest breath of hope for everybody is that we have so much more knowledge and information that we can use to do things more smart and a lot more strategically than what we did last year, which was we don't know anything, let's just shut down and wait and see what happens. And now we're just not in that position. So hopefully that's where we'll see CEO sentiment as well, is that, hey, do we really need to shut down, or can we just work smarter? We put all these barriers in the 6 foot apart and all those little circles. And so a lot of businesses are already ready to continue to do business with these social distancing requirements instead of trying to go to as an extreme of a shutdown. So that's why I'm really excited about this year, is that we really are seeing momentum in the right direction. And as long as we can keep reasonable requirements from getting to be unreasonable and shutting down economies again, I think we'll be really well off to going forward.
Okay, Rebecca, stick around because we've got a slate of earnings that I want to get your take on over time. Yeah, Rebecca, I want to bring you back in as well. The stock up 3.5% after hours, Lyft beating on the top and the bottom line. Some optimistic commentary there. Some optimistic commentary there in terms of the profitability metrics ahead. And I think probably for consumers, Rebecca, this line from the president saying that driver earnings could remain higher long term compared to pre-pandemic levels. I think for us consumers, that indicates that we might be paying those high prices for a while. What's your takeaway?
So good and bad news, right? We had both in there. So I was really glad to hear the number 3.6 million additional active users, which was what I was looking for. And that really indicates that we're going in the right direction as far as activity with a company like Lyft. Definitely super excited to see the first positive EBITDA quarter for Lyft. Congratulations to them, sooner than they thought, and that is awesome news. But the beat on the top line number, phenomenal beat. I mean, wow, we're talking about, over 70, almost 70 million on the beat on the top line. So really encouraging news coming out of Lyft, and that you can see the market reacting appropriately, up 2.3% already, and absolutely very well deserved. And now on the user side, as far as the actual gas charges and being up, the energy costs being so high through the inflationary period that we are in, whether it's transitory or not, it's definitely higher right now. And that, it could do two things. It could actually make people, not have a car and go with, drivers like a Lyft and of course Uber, or it could make people use less rides and walk and bike. So we'll just have to see long term. It's just still too soon to tell, it looks like.
The other fascinating bit to me here in this earnings report is that we do have some actual metrics for how much the company was earning per rider. So quarterly revenue per active rider increasing by more than $5, $44.63 versus $39.06. Big picture, how does this impact the economy? The fact that people have to pay a lot more money. I mean, truly in New York City on a rainy day, you will be paying 5 times what you would have paid even just 4 months ago to get a ride with Uber or Lyft. It's pretty astonishing. And I'm just wondering if there's anything from your vantage point, Rebecca, about the economics of this, how long this truly can last, these higher prices, even though the company's president is warning that they certainly could last a while.
Yeah, this is a huge problem. And right now how Powell is dealing with it and the Fed is dealing with it is they're saying it's just labeling it as transitory. And, we are seeing the data. And so what they have done is acknowledge that it exists and that it's here, but they just want to label it as transitory. You and I both know that you cannot add in $8 trillion to the M2 money supply. And when I say $8 trillion, where does that come from? That comes from the CARES Act, the HEROES Act, the ARP that was patched this March. And then, of course, the Federal Reserve is still buying $120 billion a month between MBS and Treasuries. So that's $1.3 trillion a year. So you can't pass 3 legislative $6 trillion total stimulus plus having the Fed stimulate us $120 billion a month, and that's pushing $8 trillion. Now, it's not all being lent out. The banks are really hanging on to a lot of this capital. But the issue is there is more money supply. That's why you've seen reverse repos really coming back and the Fed pulling back money supply in overnight, because we see the inflationary pressure on the PPI and not the core CPI, but obviously, the consumer personal consumption and CPI that doesn't, exclude food and energy. And so people will absolutely change their buying decisions when you have inflation at this level. And so we haven't seen it yet in this earnings season, but absolutely, is it a problem for the rest of this year and people to really figure out, are they really able to buy what they need to buy with their checks? Because everything is so much more expensive at the grocery store. They can't even fill up their car like they used to. Now they have to, fill a half a tank. These things will impact the rest of our year if we don't get a handle on how fast prices are continuing to rise.
Rebecca, stay with us. I do want to bring in Alicia now for